Welcome back to our channel. So students, in this video we are discussing the advanced accounting short theory questions. Okay, so in part A, whatever the theory questions is there, in this video the complete theory questions for the short, which you can able to score 20 marks weightage in your final examination. Okay, so these are the most repeated questions I have made my notes, and this notes is available in our telegram group for free of cost. Okay, so all the links I have mentioned in the description box. So the first one is most important theory question for short is partnership. Okay, so what is mean by partnership? So what is mean by partnership? According to the 1932 Partnership Act, whatever the relationship between two or more persons is there, okay, to share their profit and losses. For example, you and me are going to start some organization or a business. So whatever the relationship between whatever the profit sharing ratio we both have, that is called partnership business. Okay, in simple terms, it is association of two or more persons to carry the purpose of business. For the purpose of the business, we are making a doing. Okay, and what are the points in that? Unlimited liability means huge number of liability is nothing about the future repayment. So there is a future repayment, and mutual understanding will be there. Lawful business, whatever the business organization you are doing, it should be like legal. Yes, and agreement based it will have, and it will be continuity in nature, like continuous process it will be, and minimum two or more person should be there, and profit and loss sharing ratio should be also there. So these are the partnership Next, you are having partnership deed. So what is mean by partnership deed? Most important question. What is this partnership deed means? It is nothing about the written agreement. So whatever the partners are there, among them whatever the agreement we are making, which is signed, which is registered, which is stamped by the legally, so that document is called partnership deed. So a partnership is a written document or written agreement between among the partners, which it contains all the things in the rules, regulations, what is everything. So what it will be there? It will have the nature of the business, name of the firm, name of the partners, what are the business, and what is the profit sharing ratio, address, everything you will have in that written document okay. Next, sacrificing ratio. So sacrificing ratio, we all know, we have done the problematic also, separate video I have done. So sacrificing ratio is nothing about the old ratio minus new ratio. So what is the sacrificing ratio means? When old partner sacrifices his share for the new partner. If new partner is entering into the business, old partners will sacrifice certain amount. So certain amount of ratio is called sacrificing ratio. Next, gaining ratio. This gaining ratio is nothing about the retirement of the partner. When partner is retired certain from the firm, whatever the balancing figure will be there, whatever the profit sharing ratio will be there, that is called gaining ratio. What is the formula? Old share minus new share. This is the formula of gaining ratio. Okay, so for the better understanding, you need to elaborate more for your examination for 4 marks. Okay, next you are having fixed capital method. So fixed capital method is nothing about the every partner will give certain amount, certain fixed capital every year. For example, Mr. A is taking 10,000 as a capital. Every year he will pay 10,000 only. Okay, so the capital of each partner remains constant, that is same throughout the business. Okay, so all the adjustments whatever we are having, like capital, drawings, etc., we will do in a separate current account. Okay, so fixed capital method is nothing about the capital which the partner is sharing into the business will be fixed and will be same for every year, and fluctuating is completely opposite. It means partners keeps changing the capital. Sometimes he will produce 10,000, sometimes he may produce 5,000, depends. That is called fluctuating capital method. And next most important is Garner versus Murray case. So Garner versus Murray is a popular case in 1903, where in which year it has happened? 1903 in England. So Garner versus Murray were arguing each other. So Garner is a partner, Murray is a partner. They both are fighting, it seems. For what purpose they are fighting? So Wilkim is the third partner. So Wilkim became insolvent. So he is unable to pay his loss. That time Garner says that it should be shared based on the capital ratio, and Murray says that it should be says in the ratio of the profit share. See, Garner says that Wilkins law should be shared as per the profit and loss account ratio. Murray says that Wilkins law should be shared as per the capital ratio. So they both were fighting, and they went for the like they have appeared in the judge also, in the court also they have appeared. So who is the judge? Joyce is the judge. You need to write the mention the names ma. So what Joyce has statemented that is, if the loss is occurring due to insolvency, it should be shared according to the capital ratio. If the loss is occurring due to realization, it should get into the profit and loss account ratio. This is the way they have declared the statement. And next important question ma, underwriting. So what is this underwriting? Underwriting is nothing about a guarantee. So guarantee given by a person to the company means we are giving guarantee to the company. Okay, so if public does not buy all the shares or debentures, the underwriter will buy the unsold shares and debentures. Underwriting is nothing about the person who is guaranteeing to the company. If your shares or debenture is left over, I will buy that. Okay, I am giving the guarantee to the company. So that is called underwriting. You will have the legal contract in that, and it will get reduced of the risk. Okay, and the last important question ma, valuation of goodwill. In valuation of goodwill, there are two methods. What is first one is average profit method, second one is future profit method. Simply I have wrote the formulas. So average profit method is capitalized value minus capital employed. To calculate capitalized value, 100 into available profit by normal rate of return. Super profit method, super profit divided by normal rate of return into 100. So these are the theory important questions for your final examination in advanced accounting. So I have finalized this 9 questions ma, since I have analyzed 10 years question paper and I have analyzed this theory questions. Definitely if you want to attempt theory questions in part A, this video questions will be useful for you all. Okay, so this handwritten PDF is available in our Telegram group. All the links I have mentioned in the description box. If you are having any doubts, you can DM me on my Instagram account. I have mentioned my Instagram link also in description box. Okay, all the very best for your examination as well as your preparation. See you all in next video. Bye bye students.